PAYE stands for Pay As You Earn. It's the system for collecting income tax from your earnings or pensions during the tax year. As with all forms of income tax, the tax year begins on the 6th of April in the year and ends on the 5th of April in the following year. How often tax is taken off depends on how often you're paid, usually weekly or monthly for employees. HMRC will calculate a tax code for you and send it to your employer. Most PAYE codes are made up of a number followed by a letter. The letter relates to the type of allowance you're getting, and the number shows the amount of the allowances which may be set against tax. Your employer then uses that tax code to work out how much tax to take off your weekly or monthly pay or pension, using the income tax rates and banding for the current tax year. They pay over that tax and national insurance contributions if appropriate to HMRC on a monthly basis. You'll be given a pay slip each time you're paid. It may show the tax code your employer used to work out the tax to deduct from your gross pay. If you're employed at the 5th of April, the end of the tax year, your employer will give you a P60 end of year certificate by the 31st of May. This will show your pay, the tax deducted, and usually the final code operated. It's always worth checking your tax code to make sure it's correct. If you leave a job during the tax year, your employer will issue you with a P45, which shows your pay and the tax deducted for the tax year to date. You give this to your new employer when you start another job.